Hello, y'all. Thank you for joining. All right, y'all. So we're going to get started here in a second. I'm going to share my screen. I have a whole presentation for you guys. Can I get a show of hands of how many of you currently trade options? Okay, so there's a mixture, completely new trade forex, practicing, took the course, be trading in about 2 weeks, new to stock option. Okay. All right, well, I'm going to go ahead and get started. Welcome to my first live masterclass. I'm going to be doing more of these, but this one is going to be specifically about small account trading. I used to trade Forex. Now I primarily trade stock options, but I still do trade Forex and I still do trade Bitcoin. Once you learn how to trade one thing, it's very easy to kind of switch over and transition. So like I said, this is going to be the small account trading masterclass with stock options. I wanted to do this as the first one because there is a big common misconception that you need a lot of money to trade stock options. So this entire month, I pretty much did a challenge with trading stock option contracts that cost less than $200 each. And so I wanted to show you guys that not only is it possible to trade with a small account, but you can make really good returns with a small account. So this is again just explaining the Market Money Multiplier new name, the new brand name that combines my love for trading the markets and teaches how to trade and invest in different instruments from forex currency to stock options. Market Money Multiplier teaches through online courses, one-on-one training. So I am doing one-on-one trainings now, y'all. I do have my bookings open on the website, marketmoneymultiplier.com, masterclasses, tutorials on YouTube, and tips on Instagram. And we also have a trading Discord group. So what you will learn today are 4 things. You will learn the strategies, the techniques, the examples, and tips. So with strategies, we're going to go over the strategies to use when trading with a small account. You'll be able to spot when and why to enter the market. We'll also learn about techniques that will guide you on when to take profit and how to grow your account 10%, 30%, or even 50% every day. I'm going to go over examples, going in detail with examples. I find that visual examples is a very easy way to learn. And then last but not least, I will have tips throughout this masterclass. You will learn a ton of tips and secrets along the way, so be sure to take notes so you can implement these tips into your everyday trading. What you will not learn today are the basics. I will not go over the basics of how to trade stock options. I have a YouTube channel that's dedicated to trading. If you guys don't know, I have a new YouTube channel now. It's called Trade with Jazz. So I have options basics on there. And I also have an 11-hour beginner-friendly course that teaches how to trade options from scratch, blank slate, absolutely no knowledge whatsoever, A through Z style. We're not going to go over terminology. If I have to break down the definition of every word I'm using, this masterclass would be way too long. And then I'm not going to go over the platforms. So all my examples are using Robinhood, but this is not going to be a Robinhood tutorial. These are all screenshots. I am going to show you guys how to read contracts, how to read the charts and all of that, but I'm not going to be doing a walkthrough of Robinhood or any platform for that matter. I have an entire module dedicated to Robinhood trading in my course that goes over everything start to finish for those that are brand new to trading and don't know how to use the Robinhood platform. Someone said the course is great. Thank you. At the end of the presentation, I will host an open question and answer session. So please save the questions to the end as some of your questions may get answered as the presentation continues. I'm hoping to answer a lot of the questions, but of course, if I didn't, then feel free to ask me at the end. So small account trading 101. A small account is considered an account under $500. This is my opinion. There is no official marker for this, but I call a small account under $500. Some people say anything under 25K because of the PDT rule is a small account. So when trading with a small account, you have to play by a different set of rules if you want to grow your account. So those of you that have taken my course, y'all know that I'm pretty strict when it comes to risk management and also what I consider to be a quality trade and a not so quality trade. With small account trading, in order to grow your account, quickly and with these big returns, you have to kind of play by a different set of rules. The first thing is you're going to have a cash account. When you're trading stock options, you're going to either have a margin account or a cash account. You're going to need a cash account when you are small account trading because a cash account is going to allow you to do unlimited day trades as much as your capital can handle. So if you have $500 in your account, you can take as many trades as you want in the day as long as you don't run out of your money. If you've taken $500 worth of trades, then you're done for the day. You have to wait till the next day for your money to settle to be able to trade some more. So it's not like forex where you can just be in and out, in and out, in and out, in and out all day, no matter how much money you have. Once you've used your money for the day, you have to wait the next day for your money to be available again. And that's for your profits, your losses, everything. With a margin account, if you have an account under $25,000, you're subject to the PDT rule, which is the pattern day trading rule, which means that you cannot do more than 3 day trades in a week. When you're small account trading, you need to do a lot of day trades in order to get that account size bigger. So you're gonna need a cash account. You're also gonna need to work with slightly out the money options. If you've taken my course, you know I'm not the biggest fan of out the money options. Slightly out the money, you can get away with as long as you are precise with your entries, which is another one. We'll just skip over here. You got to be very precise with your entries. There's not a lot of room for error when you have a small account. And this comes with knowing what you're doing. And when you know what you're doing, precise entries is not difficult. You have to be patient. You have to wait for a setup to be there. You have to wait for the trade, the right trade to be there. Get out when you get profit. Like, don't get greedy. You know, you're going to have to use a majority of your balance per trade. When you have a larger account, I do not recommend using your entire account to trade with every day. I recommend using half your account to trade with every day. But if you have a small account, you're probably going to use 80, 90, or maybe even 100% of your account to trade with in order to make the type of gains that you need to grow your account. And you're going to need to be on high alert. This comes with the precise entries. You're going to need to set your alerts, set your stop loss, set your take profit areas. Again, there's not a lot of room for error. So these are the 4 strategies that I pretty much use when it comes to trading a small account. Gap filler is going to be my go-to. At the beginning of the day, I'm always looking for a gap to fill, whether it's to the upside or the downside, doesn't matter, because we make money both ways with stock options. So if we have a gap up, I'm looking to fill that. If we have a gap down, I'm looking to fill that. If you're coming over from the forex side, when I go into the examples, you'll see what I mean when I say a gap. But because the market is not open 24 hours, there's still trading and trades being put in and investors setting their orders overnight and in post-market and pre-market. But with stock options, you're not allowed to trade after hours or pre-market hours. So when the market opens, it's usually opening at a different price point from where it closed the previous day. So let's say Google closed the previous day, I'm just going to throw a number out there, at $150. Well, the next day, there's overnight trading, orders being put in, stock shares, stock share traders doing their thing overnight, pre-market hours. The next day, it's opening at $152. There's a $2 gap that the market is opening with on the chart. And that gap usually gets filled. And that's one of the strategies that I use. One of my favorite strategies. I go over that a lot in the course with a lot of examples, a back testing of showing that gaps get filled. It's just a matter of when. With a small account, I find that you can make a lot of money very quickly when you use the gap filler strategy. If I can't do gap filler, the next thing I'm looking for is a trend writer. Sometimes there's no gap to fill. Sometimes we have a flat open and we're just steady going up or steady going down. And so I'll get in and ride the wave. It's simply just riding the wave. The next strategy that I use is overnight swings. This kind of has to do with the gap that I was just explaining. With an overnight swing, typically I like to put in a trade. I look to put in a trade at 3 p.m. because the market closes at 4 p.m. Eastern Standard Time. So I'll look to put in a trade in that last hour, which is the power hour, seeing where the market is, seeing if, okay, it's looking like we're steady going up. The next day may be a gap up type day. So I'll get in for a call in that last hour of the market. And then the next morning, there'll be a gap up. Then that next morning, I close out. That first minute of the market, that first 2 minutes of the market, I'm closing out. I've made my money. I've made 20%, 30%, 40%, and I'm done. That happens a lot for me, particularly AMD, because I trade AMD a lot. So it's kind of gotten a little bit predictable for me. When I say, oh, I made $80 in 2 minutes, it's because I did an overnight swing. I swung something into the next day and I closed out within the first 2 minutes in the market. All right. And then the last but not least, the thing that I look for when it comes to a strategy is either ID stands for intraday, I guess a nickname or shortener or whatever. So intraday bounce or intraday rejection. Intraday trading is usually looking at like the 1 hour time frame. So it's not technically scalping. So an intraday bounce or intraday rejection usually doesn't happen in the first hour of the market. It usually happens like in the middle of the day. I find that it usually happens like right after the lunch hour. That's just something that I've noticed over the years. And that's when price will, maybe it's been running up all day, all morning, and then it hits a rejection point, and then the last half of the day, it's getting rejected. Today was a perfect example of that. If you guys traded today. So then let's say you missed that run up in the morning, and then you catch that rejection point in the middle of the day, and then ride that for the rest of the day. So that would be an intraday rejection. Intraday bounce is for the first half of the day, we're slowly going down to a support area. And then as soon as we get to that support area, you bounce off of that and then you ride that bounce. 7 recent examples. They're all from the month of March that I took from a small account, all on Robinhood. And each trade will show you how to make profit using less than $200 for each option contract. There is one contract where it's not $200, it's $263. Okay, I clicked mute all, so everyone's mic should be off now. This first one, I have little nicknames for all the trades also. This first one is called 90% in 90 minutes because that's what happened. This is a zoomed out view of the AMD chart. So how I mentioned earlier, AMD is one of my favorites, if not my favorite stock to trade. And so on a zoomed out view, you can see that this move wasn't even that big, but with stock options, the move doesn't have to be big for you to make a lot of money. And this is the 10-minute candle. This is where I got in at, and this is where I got out at. This was a trend rider trade. I was riding this red EMA cloud down. So I got in for a put and just continued to ride it down. This is a closer view of what I mean. This is the 15-minute candle. This is a screen grab from my phone, the phone version of TradingView. TradingView is the chart platform that I use, that I've always used. This is AMD 15-minute. As you can see on the indicator here, we are currently kind of riding this red EMA cloud wave. And so I got in for that. And this was actually the middle of the day. I don't typically trade the middle of the day, but I was seeing that we were steadily riding this EMA cloud down. So I decided to get in. Got in at 1:40 p.m. Eastern Standard Time. All this is Eastern. I got one contract for $90. With stock options, you have to move the decimal place 2 places to the right or multiply it by 100 because a stock option represents 100 shares of that stock. Just know that you move the decimal place 2 places to the right. And that's actually how much you paid. So I paid $90 for this contract. I bought it on March 14th, and then it started going up. The contract started going up because I got a put. Even though the stock is going down, my contract's going up because I got a put. With a put contract, you make money when the stock is going down. You're technically betting against the stock. And because it's going in your favor, you're making money on it. Your contract is becoming worth more. The current price at 140 was $148. And that's represented here with the market value. $148. So I'm up right now 64%. I'm up $58 after spending $90 on it. 4 minutes later, I'm up 91%. Only 4 minutes. This is a 15-minute candle. So it wasn't even that big of a move, but because it was moving further into the direction that my contract needed to go in, I'm getting more and more and more in profit. That $90 that I spent has now turned into $172. So I'm up $82, 91% on this contract. I decided to close out. That's an amazing return. This is my order contract. Filled it at 11:23 a.m., $90. 3 cents is the regulatory fees. That's how much Robinhood charges to use their service, basically. So you pay 3 cents in, they take 3 cents when you get out as well. Sold it for $170. This is just showing when it was at $150. They took the 3 cents, so I got back $169.97. This is another example of making 22% in 17 minutes. This was a QQQ $450 strike price call with an expiration date of March 12th. I bought it on March 8th. So it had 4 days to expire, which is considered a 4 DTE in the stock option world. DTE stands for days to expire. So 4 DTE is pretty good. The contracts don't cost that much because it's technically a high risk contract because it only has 4 days until it expires. Trading with a small account, you're going to have to get contracts that expire pretty soon or get contracts that are way out the money, strike prices that are not even near where the stock is at. Either or. You don't want to do both because that's like a worthless contract if you do both. But it's going to be either or. You're either going to have a far out strike price or you're going to have a soon to expire expiration date on your contract. That's why you have to be precise. I chose the soon to expire route with this one, and I let my Discord group know that I was getting in and that I was buying it at 153. So I got in, bought this contract for $153 at 9:32 a.m. on March 8th. This is what it was looking like on the chart. So on the chart, what we were doing, this is the call. So it needs to go up. The stock needs to go up in order for my contract to be in profit. We were riding the green EMA cloud. So this was a trend rider trade. As long as we were staying above or at this green EMA cloud, I was going to stay in. So it's 9:34 a.m. at this point. I'm up 9%, which is $15 because I only paid $153 for this. So I'm up 9%, been in this for 2 minutes. Okay. Same minute, I'm up 11%. Next minute, I'm up 15%. I was telling Discord here, I tried to close out at 18%, but it got rejected. So I'm waiting a little bit longer. And again, this is happening very quickly. I got in at 9:32. It's only 9:35, and I'm up 15% here. The contract is now worth $177. So over here, now it's 9:48 because we had got rejected right here and it started bouncing up again. I'm waiting, and I'm watching this actively. I recommend you watching the trades that you're actively in when you are scalping. So this was meant to be a scalp. Now I'm up 16%. 2 minutes later after that, 9:50 a.m., I'm back up past 18%. Now I'm up almost $30 on this contract. I decided to close out. When I closed out, it was up 22%. So because of that, it made my entire account up 5%. And I still had a buying power of $336 because I only used $153 for this trade. So I can use that buying power to go buy another trade, or when this retraces back down a little bit, jump back into this same trade. If it's doing the same thing, riding that trend, I can get in again with that buying power. Or I could have bought multiple contracts of this. I could have bought 3 contracts of this if I wanted to, and then made 3 times this. I would have made almost $100 on this one play and then be done for the day. Not even 30 minutes after the market opens. The market opens at 9:30 a.m. for stock options, or the stock market in general. So you see how it can add up. This is an example of how I doubled my money in 2 days. This is an AMD call. So I need the stock to be going up in order for me to be making money on this. I bought this on March 19th for $98, one contract. This is pre-market, 9:19 a.m. because again, it doesn't open until 9:30. Because I bought it on the 19th, pre-market on the 20th, I'm up 7% from what it was doing the day before. This is one of those, remember in the beginning, I was saying how if I'm planning on swinging, I usually will get something like the last hour of the previous day. So that's what I did with this. I got this like the last hour of the 19th. So pre-market 320, I was up 7% from what I did that last hour. Now we're opening. It's 9:30 a.m. Market's open. It's March 20th, next day. And I'm up 22% on this contract. I held this for the rest of the day. I should have probably closed out right here at this 22%. I should have probably closed out because for the rest of the day, this is the 20th here where the arrow is. For the rest of the day, we were kind of in this range and then we broke down. And then I definitely didn't want to close out being non-profit. So I waited it out. The rest of the day, we kind of came back up a little bit, but we only came back up to where we pretty much started. We came right back up to this 179 area, which is pretty much where we started the beginning of the day. So I really should have just closed out in the beginning of the day, but I didn't. So I had to hold throughout this after market on the 20th. This is 5:06. This is 36 minutes after the market ended on the 20th. We had a gap up post market. Now I can't trade this gap. I don't know how much money this is reflecting on my contract because the market's closed, but I'm feeling more confident about holding it because the investors have stepped in. They're getting their AMD shares, and it's likely that we are going to have a gap up in the morning when you have a gap up in post market. So I saw this, got that screenshot. Cool. This is another screenshot of aftermarket on the 20th. This is showing how I was down because I was holding this contract through this dip, right? And I had an AMD and a Tesla option. And you'll see why that's important on the next screen. So now we're on the next day. And I have this big smiley face here because look at this gap up. So the post market, we had that gap up. It was only at $182. The price is right here in blue. It was only at $182 post market. The next morning, we had a gap up. We're at 180 cents. What 186 for the pre-market price. So that is a $7, almost $7 gap from where we closed at 179 the previous day. So this overnight swing is doing very well. As soon as the market opens at 9:30 a.m., whole account shot up 188%. This was like as soon as the market opened, like the millisecond that the market opened. My hands couldn't move fast enough. I couldn't close this out. So as you can see, I had the Tesla call open and the AMD call open. The Tesla call still down. The AMD call that I was holding from the day before, but really the day before, the 19th, because now this is the 21st. It's up 252%. I'm like, oh my goodness. I go into the contract. I click on this. This is that screen. What happens when you click on the options contract. And I'm seeing my position. Got in $98. Bought it on the 19th. Now it's up 193. My hands didn't move fast. I couldn't close it out when it was at that 252%. But I'm still up almost 100%. I'm up almost 96%. So I closed it out. So instead of my account being closed out at this lovely 188%, I ended up getting it closed out at this 158%. Still amazing returns on a small account. Amazing returns on a small account. Yeah. Now with this screen here, if I would have had a limit order set in for the Forex people, a limit order, limit buy, limit sell is the equivalent of take profit. So if I would have had a limit order for whatever this touched at, maybe it was $200 and something, $215. When it hit that, it would have automatically closed it out at that price for me. But I didn't have a limit order in. I was doing everything manually. So that's why I had to manually go in and do it. And by the time I did it, I lost some money, but it was only $20. That's okay. But that's just showing you this contract doubled in a very small amount of time. Oh, and this was a Bitcoin play that we were in. We're still in Discord. And as you can see, we were in profit with that too. This is another one, made $80 in 2 minutes. This is AMD again. I really like AMD, as you can tell. I encourage y'all to look at AMD if you're not trading AMD. So this is pre-market. The minute before market opens, we have a small gap. Actually, it's kind of big because this is kind of zoomed out. That's a $3 gap. That's actually not bad. There's a $3 gap right there. The day before we ended at 202. The next day we're going to open at 205. So got a $3 gap coming on. Again, I had my options contract in from the day before, preparing for this gap. I was either preparing for a gap or a flat or to hold it if it was a dip. Either way, I got in the day before. Look at what happened the day before. We were doing nothing but riding this green AMA cloud. So that shows strong support. That also shows a strong trend. So you can make a lot of money on these gaps when you do these overnight swings. It's one of my favorite things to do, small account or large account. First minute of market opening, 9:31. Not only did we gap up, but we started continuing up as we gapped up. So now we're at 206. Okay, so this was a 215 strike price call. That's out the money. We're trading at 206. I got a 215. That's out the money, but that's the one that this account could afford. So that's what I got. I paid $180 for the contract, bought it on March 1st. Now, when we open the market, I was up 11%. That's from the day before because we didn't open yet. As soon as we opened, I'm up 41%. And then this screenshot was taken when I was up 49%. So now I'm up $89 on this $180 contract. So when I sell it back to the market, I can sell it for $269. By the time I sold it to the market, I lost about, what is that, $8, $7 on it plus their fee. And then my whole account was up $81.95. Still had $293 of buying power for me to use another trade if I want to. But close that out within the first 2 minutes of the market. With the small account, you don't want to get greedy. 49% is amazing. That's an amazing return. This is another example of making $81 in 2 minutes. Another 215 call. I bought this one on March 7th. This is the one that I was saying in the beginning. One of them is over $200. This one I paid $263 for it. $263, but my account could still handle it. This account, small account, under 500. Yeah, this was the trend rider. So I got in, started going up immediately. I'm like, okay, we're going up. We're going up. 27%. I closed it out a little bit more than that because, as you can see, for the account, I'm up $81. And on this contract, I'm up $72. So by the time I closed it out, it was worth $81 profit. And that's how my account got up $81. AMD on this day on the 7th was just running up like crazy. Okay, watching the gap fill on AMD and at 263. This is for the Discord group. And at 263, immediately up, 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 up. This was the move right here, very, very small, but was able to buy a contract for $263 and sell it for $344. Bought it at 9:32 a.m., sold it at 9:35 a.m. on this teeny tiny move. I love AMD. This is a Tesla swing trade. So this one's interesting. The reason why I got in when I got in is because Tesla gapped down to a key support level. So I entered in for a swing trade on March 22nd. This is the support level that I'm talking about. This gray beam, this is a support and resistance beam. This is something that I draw on all my charts. It represents key levels in the market that either act as support or resistance or both. Fell down here. Honestly, look at this huge gap. We fell down here to this 165, 166 area. So I decided to get into a swing trade. I got in on the 22nd of March. The expiration date wasn't until the 19th of April. So I gave it plenty of room and time, but I also got it super out the money because that's the one that I could afford because I'm trading with a small account. So the strike price on this was $195, and we're down here at 165, 167. Yes, it's out the money, but it had a lot of time to play out. And now, y'all, I'm having so much FOMO. Because if I show y'all Tesla, like literally right now, if I would have held this, I would have made so much money. Okay. Because Tesla had a huge run up today. Huge run up today. It ran up like $13. So this is a swing trade from the 22nd of March. So I got in. If I could zoom in here. I go up and then came back down because of this right here. This wick, the skinny candle, that's called a wick. We went up and then came back down and closed down here and then started to trail back up. So that's why my chart also shows going up, coming back down. But then I let it play out for the rest of the morning. This is 10:11 a.m., 10:12 a.m., 10:14 a.m. I just let it go up 14%, up 18%, up 20%. On this one swing trade. So this is day 2 of the swing trade. And this is what it's looking like with the 15-minute candle. Each one of these candles represents 15 minutes in the market. We're starting to get rejected here at the red EMA cloud, which is very predictable. But again, I was just letting it play out because it had time. So now this is still day 2. People in Discord know that if they didn't catch it on day 1, because I put this in the day before, so they didn't get it day 1, now is a good time to enter. Some of them saying that they're in. I'm letting them know where the resistance levels are. Someone in here is up 30%. So all these candles are green. I'm in a call. There's no reason for me to close out right now. I'm just letting it ride. Tesla's up 20% for me. Again, that's day 2. Held that for the rest of the day of day 2. This is how my day 2 ended. Kind of choppy, but still all green. Never went into the red at all. All green for the day. Ended the day with 15% on my account with this one call. A resistance level, someone said in the chat, what is a resistance level? A resistance level is where price gets rejected at. It's a level on the chart where price has previously been rejected at multiple times, enough to establish a pattern. And those can be marked in your chart with support and resistance beams or trend lines. Now, this is the morning of day 3, March 25th. There was some news and it was saying Tesla stock catches another downgrade. Wall Street hasn't been this bearish in years. And so this is pre-market. This is 7:34 a.m. So I'm like, dang, there goes my swing trade. I'm gonna have to hold it even longer than I'd like because clearly this is terrible news. Wall Street hasn't been this bearish in years. It's terrible. So clearly I'm going to be down for the day. Like I was just already mentally preparing to be down because of this news. And this is just one headline. There was a lot of headlines like this, but this is just the one I screenshotted. So I'm like, okay, great. We're going to be opening with a gap down, yada, yada, yada. To my surprise, we didn't. This news did not affect it technically. So there's technical and then there's fundamental. News is fundamental. The charts is technical. It didn't do anything on the charts. I actually started the day, 9:33 a.m., day 3, up. I'm up now. For the day, I'm up 18%. And in total, I'm up 37, almost 38%. Same minute, I'm now up $63 on this trade, first 3 minutes of the market. So I decided to close out on day 3 because I got up to 46%. And this candle right here, tested out at the bottom. This is the 10-minute candle. This represents the first 10 minutes of the market, but this screenshot was only taken at 9:34. So this is the first 4 minutes of the market. With a candle like this is technically called a bullish engulfing candle. With a candle like this, it's bound to have some retracement and usually very quickly. So I did not want to get caught in the retracement. We were also hitting my resistance beam, which is this gray beam right here, and starting to wick down. So I decided, you know what? I'm going to take my profits here. I could have held on. I could have rode that wave of retracement, handled that pullback. Also, with the news, I was like, you know what? I'm just going to get out. So I was definitely planning on swinging this a lot longer than 3 days, but I went ahead and closed out with $67 profit, which is 46% return. All right, this is called double back. This is another AMD trade. This is a call. So again, I need the stock to go up in order for me to make money. 9:45 a.m. I'm in a call. I got in, bought it for $169. Right now, the contract is worth $206. So I'm up $37, which is a 21, almost 22% return on my investment. I was only in this for 6 minutes. I put this trade in the Discord group. All these trades are put in the Discord group. Got this at 9:40, up 14%, pretty much right after I got it. And then I'm letting them know I closed out at 25%. This screenshot was taken at 21, almost 22%. But when I closed it out, it was at 25% because of this candle right here. This is another bullish engulfing candle, huge candle for the first 15 minutes of the market. And I decided to ride that wave. Now, this blue line here represents an area on my chart that was on for the larger scale. And on the chart, this is that blue line. The same blue line for the zoomed in version right here is this same blue line here. So as you can see, so the person that asked about resistance, this will further clarify resistance. This blue line was marked on my chart because it was acting as resistance. Got rejected here, got rejected here, got rejected here. I marked this with a blue line and I put this text on my chart. break and retest. Break and retest is another strategy that I use. You can use it on any chart, but I specifically had it marked on AMD because I knew that once we broke this very clear resistance, if we ever came back and retested it, and that's based off of previous price action, back testing, how the stock moves, and just the strategy in general and how this operates. The first time I got in on this day, which was April 1st, we had broke it. And so I was riding the breakthrough. That's how I made that 22%. I was riding the breakthrough. Got out, let it do its thing. I'm out the market now. I got out. It came back down, these red candles, and it retested my line. So that was 50 minutes later. AMD came down to retest my break and retest line. So I decided to get in again because this was a trade plan that I had already had marked on my chart that I was going to get in anyways. Usually, how I trade is I find a move, I take it, I get my money, and I go. I usually don't try to search for other trades. Like I just won. I'm going to walk away. But in this instance, it did something that I was already planning to do. It came up, rolled that breakthrough. It came back down. It retested my line. So I decided to get in again on this retest. Getting in again on the retest, look what it did. It did exactly what I said it was going to do. It bounced off of the retest line. So this little bounce happened immediately after retesting this line and made me another 17%. This small, tiny candle. I was only in for 3 minutes. Yeah, it's the same contract. I got the same contract again. So I guess that's why I called it double back, because I doubled back. Got the same contract, different strategy. Now the contract, I paid $151 for it, and I was able to sell it for $177 and just made another $26 on top of what I just made an hour previously. Is that it? That's it. I was kind of getting a roll. Okay, well, that's it, y'all. And now it is Q&A time. And let me answer some of the questions in the chat first. Is this course for non-American residents? With stock options, is trading the U.S. stock market, so you have to have a U.S. stockbroker. And with U.S. stockbrokers, they're going to ask you to have a social security number and a U.S. address. Now, apparently, there are ways to get around it. And there's also apparently brokers that are good for Canada and the UK, but I don't know them. If you could put it in the chat, but I know there's a way to do it because there's people in my course that live in Europe. Will your books be open for the foreseeable future? I would like to book a 101 in May. Yes, they are open for the foreseeable future, Monday through Thursday evenings, unless I'm on vacay. What time frames do you usually chart on? And do you use different time frames when you're planning your trade in the last hour of the day versus when you're planning an intraday trade? So I usually trade on the 10-minute time frame. That's what I have my charts just default set on because I'm usually looking to get in and out. So I use a 10-minute time frame for the most part. When I'm looking for intraday trades or it's a stock that I haven't been day trading a lot, then I'll have it set on the 1 hour just so I can get a more zoomed out view for a better entry. When I wasn't actively trading Tesla, but I was still keeping up with it, I had it on the hourly candle. But now that I'm actively trading it, I have it on the 10-minute candle. Thank you. Just watching this made me see where I have been making a lot of mistakes. Too many indicators for one. I'm glad. Yes, too many indicators is a big one. You only need 3 things. You need the EMS cloud indicator, support and resistance beams, and trend lines in a smaller time frame. That's it. And pull out a Fibonacci if you need to, but don't leave it on your chart.
Hi. Can you hear me?
Yes.
I have a question. So all of the profits that you make from trading, how do you actually get that money? Do you have a bank account linked
Yeah.
to Robinhood?
So one of the things that I love about Robinhood, I mean, every account you have, every broker you have you transfer money in through a bank account and then you withdraw money through a bank account. But what I love about Robinhood is you can do it instantly, same minute. I'm able to transfer money into my account through my debit card, through my bank account, and I think also you can do it through credit card too, immediately. They call it instant transfers. So I can instantly transfer money in. And then after the money has settled, which is the next day for a cash account, pre-market hours, it's settled and I can transfer my money out and it's in my bank account that same minute. So I love Robinhood for the instant transfers. There's no 2-day, 2 business day wait time, like with a lot of other brokers, none of that.
Okay, so you don't have to wait until like the next day to pull out your profit.
No, you do. So with a cash account,
Okay,
you have to wait the next morning for it to settle.
okay, gotcha. And from what time to what time is the market open? I believe you said it opens at 1 9:30 a.m.
It opens at 9:30 and it closes at 4. What platforms do you usually use to check the news? I'm a technical analysis trader. I find the news sometimes is there to confuse you or throw you off track. And that's just being honest. As you can see with that Tesla example, they put that news out right before the market opens, and then we had a huge bullish engulfing candle as soon as the market opened that completely contradicted with the news. So I feel like that happens more times than not. So the only news that I actually really pay attention to is when Federal Jerome Powell is speaking and when CPI comes out. CPI comes out once a month, and I check that out on MarketWatch. So marketwatch.com has a free economic calendar. A lot of brokers will also let you know when a speaker is speaking and when major news is coming out, like CPI, PPI, job reports, JOLTS, all that stuff. But I just find it out on MarketWatch. I check out MarketWatch usually in the beginning of the week. It lets me know what's happening for that week. And if it's CPI, the day of CPI, I'll pay attention. And if Federal Jerome Powell is speaking, I won't trade while he's speaking, which he usually talks like once a month at 2 p.m. I won't trade during that time, but I'm usually not trading during that time anyways. So those are only two things I look at: CPI and Powell. I find that everything else will have you in a whiplash for no reason. Can you explain the gap filler? So I kind of already explained the gap filler, but it's basically when there's a gap in the market because of pre-market trading and post-market trading, and you are making money because you had a trade in from the day before. And when the market opens, you're opening with profit. So you're able to close out in those first couple of minutes of the market. So that's filling the gap that way, but you can also fill the gap after the market has opened. So let's say that Tesla opens with a gap up of $5 and you didn't have a trade in for the day before, you can do the gap fill down. So that gap has to get filled. So you can get in for a put and then ride that $5 gap down and hold it until it gets filled. In my course, I teach to aim for a 50% gap fill because there's usually some like retracement there, this Fibonacci stuff. But you can do a gap fill from having a trade in the day before, or you can do a gap fill during the active hours. But the gap is going to get filled and you can make money on that. Does Robinhood take out the capital gains tax automatically? No. Nobody takes out the capital gains tax automatically. It's up to you to take your 1099 statements that Robinhood or any broker will send you. If you've hit a certain threshold, they'll send that to you, and then you have to pay the taxes on the capital gains tax. Do you identify the resistance levels only when you're in a trade? No, I have resistance levels marked on my chart, period. All the charts that I trade are always marked up. I've had the same lines, the same trend lines, the same resistance beams and support beams on my charts since forever. I just drag them out, basically. Actually, let me show y'all. All right, so this is the example of Tesla. This is my Tesla chart. So you see I'm zooming out. All of my support and resistance beams, they're already on there, and they've been on there. And then all I do is just drag them out and drag them over as time goes on. So when I'm zoomed in, I may not always see the other ones, But then if I zoom out a little bit, I could still see it. Do you have a day trading journal? If so, which trading platform do you recommend? So I have a day trading journal for both options and for forex, and the day trading journal is included in the course. The download it's in there for free. It's using Google Sheets. Do you prefer trading options over forex? If yes, why? Apart from limitations with the platforms and brokers. So I've been kind of going back and forth with that, especially recently. So I've just decided not to choose. I just do both. But I find myself trading options more, specifically because I really like AMD and I also really like Tesla and I also really like SPY. And so there's just some things that I would be leaving behind if I completely went over to the forex side. But I do love that forex being able to get in and out and all that stuff. But I don't like the whole having to transfer your money in through Bitcoin thing. That they take so many fees with that. That's ridiculous. I don't like that at all. I also don't like how shady some of the brokers are. There's a lot of back end stuff with forex that I'm not a fan of, and I feel like my money is a lot safer with stock options. So when it comes to volume and trading larger accounts, I prefer to do that with stock options. But like for like quick flips, yeah, I can do that in forex for sure. But I just don't see myself ever like trading with $10,000 again in forex. Like I've done that before. When you have a small cash account, how much should we pay ourselves and the duration, weekly, monthly? I wouldn't do this right away. I don't recommend paying yourself unless you have to. I recommend growing, 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 growing. You don't want to try to live off a small account. Small account is for growing. How much money do you need to quit your job? How much money do you need to trade full time? It's a very simple calculation for this. You got to work backwards. So let's say that you need $5,000 a month to survive, which in today's day and age is not a lot. A realistic, because I'm not going to lie to y'all, a realistic account growth where it's easy, you're not stressed out, you're not trying to chase trades, you're not whatever. A realistic account growth is 10% of your entire account every day, every month. That's, dare I say, easy. That's very doable to make 10% of your account. So if you need $5,000 profit to withdraw every month, and to answer your question, I do recommend doing a monthly withdrawal, not a weekly withdrawal. I mean, unless you need the money. If you need the money, take it out. But if you can let it be in there for the month, do a monthly payout. If you need to pay yourself $5,000 a month and you're making 10% returns on your entire account, that means you need a $50,000 account to make 10% every month and be able to take out $5,000 a month without depleting your account. That's the thing. You don't want to ever have to dip into your starting balance when you're trying to trade for a living. If you're trading for a living, you do not want to dip into your starting balance because once your account gets depleted, it's hard to build it up. And I heard a quote that I'll never forget that honestly it like whipped me into shape, to be honest. If you take a loss at 40%, your next trade you have to make 80% to get it back. And I don't know why that shifted me so much, but it did. So now I keep my losses super small because it's so true. Whatever you lose, you got to make twice to get that back. So you never want to have to start dipping into your starting balance. Now, if you start with $500 in your account and you aim to make 10% of your account every day, and y'all saw in these examples, I was making more than that on my entire account. I was making 18%, 20%, 40%, that one day 135%. But let's say 10, especially if you're a beginner. Let's say 10. So $500 starting balance, make it 10% of your account every day. You're aiming for $50 profit on day one. You're aiming for $51 profit day 2, $52 profit day 3, so on and so forth. Now, the thing with starting out with 500, you're not withdrawing money. You're just focused on growing it. Growing it, growing it, growing it. Dare I say flipping it. That's your goal, is to just grow it up. But you can definitely trade with less than 500. Every single contract that I bought in this challenge was under $200 each. So you can trade 3 contracts a day or take 3 trades a day with a $500 account. Have you traded futures? I have not traded futures. I am going to start trading futures. That's on my to-do list for the year. Every year I strive to learn something new with the trading world, and this year is futures. That's my to-do list. I know that trading accounts recommend that traders set up an LLC after a certain amount is made on an account. Do you know what that exact amount is? I don't know what the exact amount is. I would set up an LLC regardless. I wouldn't even wait till you hit a certain amount, especially if you have any other side businesses going on. I'm not a tax accountant, but I would just umbrella everything and have it set up regardless, because you never know. You can make a lot of money this year and you want to be protected. So I would set up the LLC regardless. With that said, how long with the strategies you recommend will it take to make 15 to 25K account from your personal experience? When I started options, I started with a $40,000 account. I deposited $40,000 in my account. So I didn't grow a small account to large amounts. That's why I'm kind of doing these challenges, to show that it can be done. It's going to take time. It's not going to be an overnight thing. It's not. And you can always deposit more money. Like if you have extra money coming in, deposit more money and get your money. The bigger the balance, the better quality options you can get, the more contracts you can buy, the more returns you can make.
I remember my question now. With everything going on, is there a certain amount of money you recommend, like putting in a day from your debit card to funding your account without being flagged by the IRS? Or have you ever had that problem?
You're not going to get flagged by the IRS.
Okay. Okay. Thanks.
You're not going to get flagged by the IRS unless you already owe them money and they're already like looking at your accounts for like garnishing, but they're not looking at it. It's with the whole taxes on trading thing, it's kind of like, if you guys are familiar with, if you have like an online store or if you get paid through PayPal, if you've ever had an Etsy store, Shopify store, they don't send you anything until you've made $23,000. And then the IRS gets flagged to send you a thing to take to an accountant. Like it's still up to you. Yeah, they're not looking at it because they don't know what you're buying. You can be getting stock shares, you can be getting crypto, and capital gains tax it doesn't work the same for those. So they don't know what you're doing. They're also not looking like that unless you're already on the radar. So yeah, like a lot of people, like they really get tripped up on the tax thing. I feel like, how much money do I need to quit my job? And tax questions are the biggest questions I get. But it's like, let's focus on being a profitable trader first. Because if you pay taxes, you did good. You did good. If you made enough money where they're sending you a form, you did good. So it's like a celebratory moment. Do you have any other questions, y'all?
I just want to say I love your channel, 1. And 2, I hope you become a millionaire in the time period you set for yourself. That was an awesome video. Just FYI.
Thank you. Thank
You're
you.
welcome.
All right, y'all. I think that's it. An hour and a half. We did good, y'all. But yes, I will be doing more masterclasses. I want to do one a month, different topics. No problem, y'all. I hope to see y'all in the course. If y'all have any other questions, feel free to email me. And this is going to be recorded and chopped and screwed and put on my channel at some point.